Access to this webinar for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders are discussed and all securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Take it away, honey.
Trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither philstockwell.com, PSW, nor its affiliates, nor any of their respective offices, personnel, representatives, agents, or independent contractors are in such capacity as licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right. Fantastic. Wait, what happened in Gilead? Are they going up still? So screw anything else. I mean, that's the news of the day. Gilead just blew through. Wow. What the hell? What was I saying before? I thought they were at 70. I don't know why I thought that. Let me see what I just said. I swear I saw them. Was I looking at somebody else? I must have been looking at somebody else. Gilead just popped 70. What the hell was I looking at? I didn't mean Gilead. I just realized they're like 80 something. Anyway, all right. So that's our news of the day, and that was up here somewhere in Nomura, AMC, COVID. GE, Hasbro. What a lot of news today, huh? Wow. Can't believe I read all these things. It's like, there it is. Okay. Geez, I read so much stuff. I forget what I read at some point, but all right, there we go. I was like, that was a long time ago I read that. Bottom line is, Gilead had this drug from the SARS time, which is 2002, and it's called remdesivir, or whatever it's called. Doesn't matter. We'll learn how to pronounce it if it works. And they had a negative study in China, and it wasn't a negative study; it was an incomplete study, because more or less what happened is by the time they started studying it, which was maybe a few weeks ago, until now, there are no more active cases in China of COVID. So they never studied enough people and they never got conclusive results. So they ended the study. People took that as a big negative, but that's stupid because it wasn't an effective study the way they did it. And it wasn't done the way you would normally do a study, because normally you would never do a study like that where you rush out your drug and give it to random people who haven't been screened or tested or identified. And not that random is bad, but in the case of a drug trial, you want to make sure the people don't have underlying other conditions and so on and so forth. And you have to make sure that you have a clean sample of the population. You can't have just randomly other issues and different things, and you want to have people in certain brackets. You want to cross compare and do double-blind placebos, things like that. None of that's happening. They just gave the drug to like 100 and something people, which is a ridiculously small sample, to see if it made a difference. And people were getting better anyway. And by the time we got to now, which is there are 0 infections in China right now. And by the time we got to that point, There's no more patients. There's no one to test the drug on. The study fell apart. They thought they would have more time to test and screen, and they never reached an eventual conclusion. But that's not a negative. That just means it was a bad study. Nobody wants to say that. Nobody ever wants to say it was a bad study, though, because, you know, the government spent money on it, people, time, resources, all that. So nobody ever says, oh, it was a bad study or the study failed. No, they say the study was inconclusive. So in a proper study with research conditions for the FDA or something like that, an inconclusive study is bad. That means your drug doesn't actually work. That's not what that meant at all in this situation. So meanwhile, Fauci was just on TV and he was explaining, which is true. He was explaining that it doesn't matter whether remdesivir, it doesn't matter if remdesivir, I can't do it. Forget it. It doesn't matter if this drug, I'm punchy from being home for too long. It doesn't matter if the drug, this particular drug actually works. What they did find in this study, and this is what the markets are really excited about, the point is the virus can be blocked by a drug. It doesn't mean this is the best drug for it. It just means the fact that it can be blocked at all means that they will find something to block it. So that's what this is about. It's not about this particular drug, because there are probably 10 different companies right now working on vaccines and cures, treatments, and things like that. But the thing is, can it be fixed? That's the question. And so when you have a particular kind of virus, some things can be fixed, some things can't be fixed, some things are incurable. This is curable because they do see an effect. And if you see an effect, it's like any horror movie, right? If you figure out what it is that hurts the creature, then you just do that, right? So they still have to poke and prod and test and figure out exactly what it is that they can do. And then, of course, hopefully the solution isn't toxic to people. You know, like chemotherapy. Chemotherapy knocks out cancer cells, but it also kills the patient. So you have to kind of balance out the chemotherapy with the how much you're going to give somebody before you kill them. Things are defeatable. Well, like the president said in his brilliant statement last week, it's if Lysol works on the countertop, then if you inject it into people, it should work too, right? And kill the virus. But that's the point, though. It does. If something works on the virus, the question is, what do we have anything that works that's non-toxic? And what Fauci was just saying is, like, here you go, remdesivir. Again, it's not toxic. It's just tolerable. It's tolerable to the point where it's better than dying, obviously. So those drug commercials on TV may cause this, may cause that, blah 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 blah. But people take it. And you sit there, and if you don't have this problem, you can't imagine why somebody would subject themselves to these side effects. But people who have these problems are willing to trade them, basically. Remdesivir has side effects, but not so much so that they aren't going to consider it for a cure to a very, very terrible virus that we have. So there's that. But the point is, something does work, and therefore that means it's only a matter of time before we find something that actually really works well. And of course, in our experience as humans, we have thousands of things that fix thousands of different viruses and ailments. So we have lots of ways to fix different problems people develop. We just don't have one for this at the moment. Wow, Dow 650. That went up another 50 points since we started the webinar. So we're really rolling now. And Gilead's at 84 bucks. Disney's flying up too. I didn't think that would see. Now, part two. Okay, so great news, fantastic. GDP was down 4-something%, but that's not 4% because it's really only down 1% for the quarter, and they extrapolate that it's 4% for the year. That's how normal GDP works. You extrapolate the quarter out to the year. So when you hear a number like GDP is down 4%, that's the annualized 4%. That's complete nonsense. You know, they've got no freaking clue. So, but Q1, you only have one quarter, so therefore you have no average. So the Q1 GDP is down 1.1%. That's, you have to think about what that number represents. We weren't even shut down for all of March, but on the other hand, obviously people in other parts of the world were already shut down before we shut down. So which is part of the whole thing people are pissed off at Trump about. But other countries were shut down before we shut down, and that means that our exports were down and other stuff was down, and and the trade was down. So there's a lot of things that were already trailing off early in March. But by the second week of March and into the third week of March, by the third week of March, we were shut down, and it was very abrupt and sudden. By March 15th, we were pretty much shut down. My birthday was March 29th, so I'm like, I remember that because that was like our second week in captivity was my birthday. But it wasn't the same week. I know that because I just remember the way it was structured. So we were already home for 2 weeks by the time that happened. By the time my birthday happened, so we were home all during March, in the middle of March. Now, when the GDP is minus 1%, and it should have been plus 3% or plus at least 2%, that means that the negative impact of 2 weeks of being shut down was minus 4% in 2 weeks on a single quarter. But that is exactly in line with what we expect, that we're going to lose about 4% a week for 8 weeks is 32%. So Q2, unless we, depending on when we open up, if we're going to open up in May, it won't be as bad, but Q2 could be heading for like a minus 32%. But what's really going to happen is what I talked about, was it Monday or Tuesday? I think I talked about it on Monday. Yes, it was from the weekend of me figuring out what was going to happen. I worked on that a lot, that thing. So right now, some states are opening up. Businesses are looking to open up by May 15th. They'll be, let's say we're 10, 15% back to work. By the end of May, we'll be probably 30% back to work, maybe 40% back to work. And that means by June, we'll be almost fully back. So that means that you're only going to have 4 weeks is 16%, and another couple of weeks, let's say in June, is maybe 8%, 24%. You're probably only going to lose about 20% or so of your GDP in the second quarter. If by the way, that by June, rather than more things opening, we don't get Fauci getting back on TV and Trump even having to get back on TV and saying, go back inside. This is a disaster. It could very well be a total disaster. They are really gambling with everybody's lives right now. And again, the death rate is such that, it's not everybody's lives, but millions of people could die. That unnecessarily could die because these idiots run out and open up the country too early. So let's see if there's any quick questions and we'll see what happens. SPG Pop 70. Oh, that's what Pop 70. Thank you, Eric. It was SPG I must have been looking at. Had the wrong screen up. I think I Gilead in my mind and I was looking at the SPG screen. Anyway, so where are we? Oh yeah. I had a thought and I lost it. Yes, virus, right? Going to talk about the virus. So where are we? Here's where we are. So I'm going to copy that. I'm going to make a new tab and see where we are in a week. Remember, we lost all our previous things. Not that we can't work it out, but we lost the ones we had. Oh, that's a horrible number. Oh, this is a US number. Shit, we left this on the US. All right, well, wow. 3.1 million cases, 1.23 in the US. So let's keep in mind, this is the important point though, because we're talking about reopening the US. So let's keep in mind that last week there were 830,000 cases in the US, and now there are 1,023,000. So basically 200,000 more cases, a 25% bump in infections in the last 7 days. Not a month, in 7 days, 25% in a week. 25% in a week is 100% in 4 weeks. That's 2 million people infected. So let's just refresh this. This is the US one. Oh, no, it's not. Here we go to the US. So 1 million people in the US. Don't care about comparing it to other places or anything like that. It's the thing is that's up 25%. That means that at the end of it's slowing somewhat. Oh, here you go. In fact, you can see right here. What is this? What's 3.5 million? What on earth is that number? If I click on the US, shouldn't I see the US chart here? There it is. Okay, good. All right. So 422 was last week, 833 it says there. 415 is before that, 636, 2 weeks ago. 636, that's pretty consistent. We're up close to 100% in 2 weeks. 48, 462, and most importantly, 41, because this is a month. 41, 213,000. So in a month, we went up. Oh, and that's right, because it's compounds too. That's the problem. So in a month, we went up from 213,000 to 1 million. So we gained 800,000, went up 4 times in a month. You look at this chart and it's very steady. And we're only taking the middle of it here. They're taking that part here to this part here. There's no indication that this trend isn't going exactly the same way. And that means in another month, it'll be 1 point. Well, the good thing is it's not a logarithmic or anything like that. This is a straight chart. So the good news is that if we're climbing at the same pace, we're only going to gain 800,000 in a month. Basically, like I said, we'll be at 2 million, but that's a lesser percentage. It seems so. You can look at the chart in an optimistic way and say, well, at the pace we were going when we had 200,000 cases, we were going at 4 times in a month. But now when we add 800,000 cases in a month, it's only 1 times more than we had now. So the more people that we have infected, as long as we don't get, the base of infections is such that when you divide it, it creates a smaller number and everybody can say how great we're doing, right? Because you have more cases and therefore you're doing better. This is the bullshit that Trump spews out every day. And this is what you hear. You go on a state-by-state basis, and where was the state one? Forget. It was Hopkins, but I can't figure out if this is a virus infections by state. No, that's NPR. Where's Hopkins? All right, let's see what you guys say. I don't think this is going to do it. No. What is this? What do you think you're telling me? How useless. Oh, how quickly is your state's count growing? That's interesting. Okay. So let's say, California, for example, how we're comparing to New York. All right, whatever. So California's going like this. Texas is opening up. Texas. And Texas is going like that. So again, these are days, right? So go back to 32 basically. Like here, how quickly is your state's case count growing? So since the lockdown, I'm sorry, it's 45 days. Shit. Oh, this is 45 days. Oh, that's crazy. Okay. So since the lockdown, we started the lockdown 45 days ago. Since the lockdown, we went from this going up very quickly, went from 100 to 1,000, getting towards much bigger numbers, 5,000, right? Then the lockdown's kicking in and the curve flattens out. But here's the problem. If the end of the lockdown causes us to go back to this, you won't know it. You see this, you don't know that people are infected for a few days, maybe a week. Then you start seeing the numbers coming in, and then you go, oh, look, we went from, I'm just saying it's 25,000, right? If this was 25,000, this would be 2.5 million. So we go from 25,000 to 2.5 million in Texas. We go from 200,000 in New York to, there aren't that many people in New York State, to 100% infection in New York State. That's how fast you can spread it if you spread it out of control. Now, that's not going to happen because people who are sick, people who have symptoms, people who think they're sick, hopefully know enough to stay home, and hopefully will be kind enough to stay home and not go infect us. Unfortunately, though, unlike other countries, which we don't take into account, unlike other countries, we don't pay people if they stay home, and we don't provide them health care if they're staying home and if they don't have a job, and we don't have any sort of system that allows them to get help other than emergency care, which is good luck with that because they're swamped. This is why our death rates are so high in the US, because we don't have a good system to help people who are sick. Yet we're telling everybody to go out and take a chance. So while I think this will more or less work, and more or less work, by the way, I mean, you got to read my thing Monday. I'm not going to talk about the whole thing yet, but I discussed on Monday, it'll work in that it turns out that 80% of the people who get coronavirus get a very mild case and don't and often, or in fact mostly, don't even know they had it. So 80% of the population can go, look, 80% of the population can go back to work and have a normal life. If you poofed away 20% of the population, what would be the harm to the economy? Well, you could say, well, there'd be a big adjustment and some businesses would collapse and they can't work with 20% less people, whatever. Okay, true, but you'd still over the course of a year, everything would be back to something like normal. So now it's different. Poofed away and dying are two different things, because dying, especially if it's a prolonged thing, causes all sorts of other disruptions. But if you just simply got rid of 20% of the people, wouldn't be a big deal economically. Life would go on. I think there's not a movie about that. Not the Avengers. I mean, some other movie where I think it is like a certain percentage of the population disappears. I don't know, the TV show, so I don't know. So I remember seeing a commercial for it. But anyway, or the Thanos thing, right? In the Avengers is half the population. Either way, though, you just got to get back to work, right? That's why he poofed everyone away in the thing. You can't kill them. You can't leave them laying around dead bodies. That's messy. But if you just boom and they're gone, it's a whole new world. And I am not, advocating that. I'm just saying economically we could recover from 20%, and it's not 20%. It's 20% of the people get seriously ill who are exposed. Maybe even only 10% get seriously ill when they're exposed. Of those, only a small percentage of those actually have to go to the hospital. But unfortunately, a large percentage of people who have to go to the hospital end up dead. That's the bad part. Once you hit a ventilator, your chance of living is pretty slim. And that's why when you see Trump say we have plenty of ventilators, it's not good. It's not. It is not a good thing that you have plenty of people on ventilators and you're doing that, because that's pretty much very close to what do you call it, to hospice. By the time you're on a ventilator, it's like a hospice. So yeah, stay off the ventilators. Basically, I mean, you have a choice. You can't do it. I mean, if you need it, you need it. But I don't want to think about it. Anyway, so this need for ventilators is an interesting thing there that they talk about, because it's like, oh yeah, everyone get back to work. We have enough ventilators now, so people can go back to work. I mean, how is that helpful? But the Gilead thing, that's the point. The Gilead thing is actually helpful. That's like, oh, we might have a cure. It won't be ready until July, but we're going to go back to work now. So it's a very weird thing. It is. But on the other hand, yeah, we're doing that. Shutting down the whole economy. So let's get back to that. 80% of the people could, in theory, just go back to work, but you don't know who the 80% are. That's the problem. They could just go back to work. If they get sick, they get sick. Who cares? Meanwhile, those 80% though come back and talk to me. That's the 80% going back to work are going to come and deliver food to my house, and so right now the chance of the food delivery guy being infected is not that high. But if everybody goes back to work, the chance of that food delivery guy being infected skyrockets. Okay, so in other words, right now, where's that thing? Hang on, let me find viruses by state so we can have a more intelligent conversation about this. Coronavirus, CDC, government, statistics, Guardian, Live Science, CNN. Are you kidding me? Infections by state, Hopkins. Sure they have it. By county, ooh, now we're talking. Okay, now how do we do this? State. Okay, so Florida. Okay, and I'm in Palm Beach County. That doesn't change? Well, how useless is this if it doesn't change? Top 20 counties by number of deaths. Well, I thought it would tell me my actual, oh, here it is. Okay, down here. All right, so 3,000 people in my county have the virus. All right, so where am I? I'm down here somewhere. Boca, oh, I'm not even listed. I'm right around here. Okay, no, I'm sorry, no, I'm not. What am I, stupid? Boca's below me, I'm up here. That's right, I don't get it. We don't rate a thing. So how many people in Palm Beach County? There we go. Okay, 1.5 million. Wow. I would not have thought. Okay, so we have 1.5 million people. I guess because of Fort Lauderdale, but wow. I mean, you wouldn't think. So wow, I'm kind of blown away by that number. I had no freaking idea. I would guess half of that. Anyway, so 1.5 million people 3,000 people are infected. So it is 15123 divided by 3,500. Boom. That's the magic number we talked about a lot. 1 in 500 people are infected. Therefore, we talked about, I don't want to get back over old ground, but basically, I live in Delray Beach. It's a fairly densely populated place. If I leave my building, I touch a door that 200 people have touched. If I go to the store across the street, I touch another door 200 people have touched. Inside the store, I'm breathing air that 200 people have breathed that day. Different 200 people than the people who, not all different, but I mean, certainly a large percentage of them are totally different people than the people who touched the door of my building. They didn't all go to the same stores. So not everybody went across the street to get a poke bowl, just me. So it's 400 different people I'm exposed to just walking outside across the street. All right, but there's only a 1 in 500 chance that one of those people had the virus, and then the chance of directly getting a transmission of the virus, if I'm careful as far as like even if that person touched the same thing I touched and did the same thing I did, or it came in right before me and his particles were still in the air, even if all that happened, it still would have to then infect me, which is only maybe a smaller chance, 1 in 3, 1 in 4, 1 in 10, whatever the chances are of actually getting the virus at that time. So 1 in 500, fine. All right. Probably not going to get the virus. 1 in 100 though. When I'm being exposed to 400 people walking across just by going across the street to go get a poke bowl, now I've got a pretty good chance of getting the virus. And then the problem is also, as more and more people go out, if you start dropping that to 1 in 50, 1 in 25, when you've got 4% of the population infected, which is nothing. But when you've got 4% of the population infected, you have a 1 in 25 chance at any given time that if you touch something that other people have touched, you've got a pretty good chance you're touching the virus. Now you're constantly being exposed, and your chances of getting infected start skyrocketing. These are the thresholds that I'm talking about. We talked about this all along this period. There's certain thresholds you don't want to cross. 1 in 500, very dangerous threshold. We have a million exposed people in the United States, a million viral infections in the United States that they know of, that they've counted. And that means that it's 1 in 330, countrywide 1 in 330. Okay, New York is way worse than that. New York is around 1 in 100. You start getting to that number, you're going to get everybody infected. I mean, unless you're locked down. Now, as soon as you lift the lockdown restrictions, you are going to get everybody infected. But that means it's going to be hell for the people who are trying not to get infected. It's basically impossible. My maid still comes. She goes to a dozen other houses or whatever. That's fine because there's only a 1 in 500 chance any one of those people are infected. So I'm willing to take that chance. But now if 1 in 100 or 1 in 50 people are infected in the state, and my maid's going 12 houses, now I've got a 1 in 4 chance that she's going to somebody's. Now I've got a 1 in 4 chance that she's coming to me from an infected house, or that her house may be infected. So think of all the things I can't do anymore. I can't go, if I'm trying to be careful, I can't go to Whole Foods. I can't go to the supermarket anymore. I can't go to I'm not going to go across the street to the restaurant when you start dropping the numbers like that. You're going to force the people who are worried about getting the virus into a minority group. So yeah, 80% of the people can go out and have fun and go about their business, but doing that is going to be a disaster for the people who are at risk. And then there's two things that are going to happen. Either we and I'm an at-risk person. Either we just get the virus in a shorter amount of time. We just see who lives and who dies, or or assuming that we're generally going to be more careful and wash our hands a lot and do so on and so forth, hopefully we can stretch it out long enough that they'll have some better treatments and it will be less horrific when you get it. Because, you know, if you get bronchitis, they got something to give you. If you get pneumonia, they got something to give you. They have specific treatments for specific things that go wrong with you. If you have corona, they don't have anything to give you. That's the problem. There's no treatment. So, you know, but the trick is, though, jumping the gun like this and putting everybody out there and taking this number down from 1 in 500 to 1 in, you know, to 1 in 100. Once you get below 1 in 500, you get into big trouble. It's like I said, 400 touches or 400 exposures to go across the street in a metropolitan area. Easy. You live in a big apartment building. You could have 1,000 people in your building. You're all pretty much breathing the same air. I don't know where you guys think air comes from, but basically it's all staying pretty much in the building, and it just moves around and circulates. I mean, some comes from the outside, but they didn't design apartments to avoid inside air. That's not a consideration in an apartment building, avoiding like being in contact with other inside air. So, you know, you're in a big apartment building. It's not much different than being on a cruise ship. You're living with these people. So again, you have 1,000 people in your building right now. Maybe 2 people have the virus, maybe. Okay, but if you have 1,000 people in your building and 10 of them have the virus, you got a problem. Then it's 1 on every floor or whatever has the virus. You have a problem. You are very seriously being exposed in some way, shape, or form on a regular basis. Think about going down to get your mail, going to the lobby for something, or going into any of the common areas, or touching the door on the way in, and the way in and out of your apartment building, and just breathing, just walking down the halls and breathing that air that everybody else walked down the same hall and breathed in just recently. You know, stop at the front desk and talk to the people, to the manager at the front desk or something like that. How many people touch that desk? Makes you think about all that stuff. So that's the danger of opening too soon, is that because we're not starting at this base. This is the base we started shutting down at. What on earth? Oh, okay, that's such a weird number. Okay, so March 16th, when we shut down this county, there were 5 cases that they knew about. That was 45 days ago. Now there are 3,000 after we shut the county down. It went from 5 to 3,000 after. You know why? Because while it was open, all these people were infected and had no idea and didn't show up, and it took this long for you to see that all these people were infected. But now we're saying, now open back up. What the hell? So now you're starting, instead of starting from a base of 0 or a couple, we're starting from a base of 3,000. Now, obviously, like I said, most of the 3,000, 90% of the 3,000, let's say, 90% of those 3,000 people are detected and they know they're sick and they're no longer contagious, or they're taking precautions, blah, 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 blah. But still, 300 people is a lot more than 0. It's a lot more than 5. That's your new base. And from that, you're going to go right back to this curve, except starting at 300 and going to 300,000. That's the danger of opening up too early. And to do it in an uncontrolled way, where you're not even testing it, you're not even saying, you know, if I were the president and the governor of Michigan says, I want to open up my state, or the batshit lady in South Dakota, I want to open up the state, whatever. Fine, open up your state. Let's take 2 weeks. Let's test the crap out of it and see if it works out. If it works out, everybody else can go. But we're going to test it on your state first. We're going to pay particular attention to, well, in South Dakota, it's hard to do, but, you know, Bismarck or whatever, you find one place where there's an actual population, and and just test the crap out of the area and see what happens when you let people out of their cages. At least find out what's going to happen before you start experimenting nationwide. So I am concerned because I think it's possible we're making a huge mistake. And unfortunately, it's all hedging, right? It's all the same thing. It's possible that this is idiotic. It's possible we're making a mistake that can end up causing a ridiculous pandemic that we have no control over, with numbers that are just completely staggering. And even if we're not, I still think that the end result is you're going to be driving all the at-risk people are going to be driven into a minority of shut-ins. And again, I'm going to be one of them, but I mean, it's going to be a minority of shut-ins who are not willing to risk their lives to go outside. But then the problem is now, who right now you're in contact with people who are by definition being careful because everybody's locked down. But you know what? What happens when people aren't locked down anymore? What happens when 80% of the people can go to bars and go to restaurants and go to clubs? The bars, clubs, and restaurants are going to open up and say, great, 80% is fine with us. We'll take it. They're half empty anyway, right? I mean, think about a restaurant on a regular night. They're not full. So they're fine with 80% of the people going out. That's no problem for them. But then what does that mean, though? Now that means I can no longer order from the place I usually order from because they now serve infected people. They're not being careful anymore. They don't have the protocols in place. The chef may not be infected yesterday, but he could have gotten infected this morning or yesterday from one of the hundreds of people who came into his place with infections. You're just rolling the dice on the whole thing. So what's going to happen there? Where am I going to get food? Where am I going to get? Where am I going to be guaranteed that I have access to tested people and so on and so forth? There'll probably be some places that cater to the paranoid and the homebound, but it's going to be crazy. And also the nursing homes. Think about that. Right now, the staff of the nursing home has to go home to an isolated home. But what happens when the lockdown ends? Now the staff of the nursing home is at risk every single day of bringing the disease into the nursing home. The chance of one of them being infected and becoming a carrier increases exponentially. Nobody's taking this into account. The market is certainly not taking this into account. I don't even understand how you can think that airlines are going to normalize so quickly that they're bouncing back and restaurants are bouncing back, and they're not going to be full again for a while, and they've got massive problems coming in. So it makes me nervous, and because of that, I'm worried because look at that. Long-term portfolio is up 37.5%. That's crazy because just a week ago, oh, is that the long-term portfolio? That's so convenient. It is. Oh, how cool. Okay. Oh, not a week ago, but whenever the options expired, 17th. So on the 17th, when we did a long-term portfolio review, it was up 8.5%. It's up 30 freaking percent, 29% actually. It's up 29%. It went from 542 to 687 in where are we, April 27th. So it's like 2 weeks. And we've had this conversation before because we had this conversation when we shut down the portfolios in September and when we cashed everything out, because you have to say at a certain point, that's too much money. This recovery is getting ridiculous already, and it didn't take very long, did it? And I bet if I refresh this, it's even higher. We're still flying up in the market. So let's see, let's refresh this and see where we are since the last time I checked. There you go, 40%. There you go, 3% every hour or two. Why not? I mean, why not? So there you go, fear of missing out, right? Now, I don't want to miss this. But we now have between this one and the short-term portfolio, which was holding on to its gains, yep, still holding on. See, people are still worried. So 515 here and 700 whatever in the long-term portfolio is 1.2 million. We started out with 600,000 combined. We're up 100% in our two portfolios, the main ones. That's crazy. That makes no sense. But you know, when you're jumping 30% in a week, that's what happens in 2 weeks. I'm sorry, 40% now. So 40% in 2 weeks. I feel it's hard to keep going when it seems so ridiculous. Like you know, I almost just want to go back to cash, start with another 100,000 to see what happens. Because I mean, it just I don't like risking this much. All right, so let's stop for questions. No questions. Fantastic. I get to just talk about whatever the frick I want. All right. Let's take a look at the other portfolios quickly. I'm sure they're all going to be amazing. Butterfly portfolio, 121. Oh, this is stupid. It was 406, and now it's 443. So it's only up $35,000. You know, that's okay. Now, why is this happening, by the way? Don't forget. I mean, you got to look at the VIX. If we can find it, there it is. Because the VIX is down. Look at the VIX. VIX was here, now it's here. What do? We sell premium to suckers. So we sold premium when it was super high, and now it's low, and that's giving us an incredible gain in our portfolios. But it doesn't mean that we really made that kind of money. Our stocks didn't become more worthwhile. The premium just got sucked out of things, and that can rocket back up if things go badly. So we could lose all the money we just made very, very quickly. And that's another reason I'm not very happy about having this exposure. So I'm going to have to really think about how we're going to handle this. It would have been better if we didn't make so much money, because I wouldn't have been worried. I would rather grind it out. But making this much money this fast makes me want to just get back to zero and let it sit. If the dividends are green, I give up. That was our worst performer. Hello. Oh, we keep having that problem with this thing, don't we? For some reason, when we change portfolios, it does this sometimes. I don't know why. There we go. All right, dividends down 14%. That's not horrifying though. I mean, considering the kind of stocks that are in here, that's okay. So that's our worst performing portfolio, our dividend portfolio. But again, we're not in it to make the money, so that's okay. In other words, Pfizer has to be over 28. It's 38. That's fine. TD has to be over 42.50. It's at 43. That's fine. China Telecom has to be over 42.50. It's at 40. That's fine. Energy Transfer, that's a disaster. Oh, no, it isn't. Ha! Wait a minute. Energy Transfer came back. Now I've seen everything. Wow. Look at that. People were ready to jump off the roof on these guys. Holy crap. And we like triple down on them. That's why it looks good for us, because it's more of a double down number. We added a lot though. We added we added another 1,000 shares. I think we had them somewhere else and did more. So Energy Transfer is now on track. That's how crazy life is now. Altria, obviously not worried about them. We need 47.50 though. They're low for 47.50, but we only sold the 40 puts. You're not in trouble unless you're below the put. Annaly is on track more or less. No, still soft. They're still soft. AT&T need 35. We're kind of on track there. Ford probably a little bit of trouble, but it should be fine. And we just added Ford, in fact, to the money talk portfolio. Macy's, you guys know I love Macy's, but these are the 13 put worries me. That's a tough road. That's a tough climb. That might be a problem. Signet, we didn't even cover. How are they doing? We might have to cover at some point, but we were so confident we didn't even cover them. And there they go. Look at them go. And Tangier also didn't cover them. Again, another that then we definitely tripled down on because they got 3,000 shares. And we're looking for 8, and there's 772, so that's not a problem. At some point, we want to cover them just out of principle. But SKT, you know, hopefully it breaks up. But again, we are experimenting. We don't know what's going to happen, but we won't find out anything bad for a couple of weeks. You know, they're going to open up the cities and they're going to tell you how great it is to be back outside and blah, blah, blah. But then when the emergency room starts filling up, and that's when they'll have to say, oops. So, and I'm not predicting that. I'm just saying that's the potential incredibly negative outcome. Because if we do that, if they do that and we go to that, then we're going to start from scratch. And everything will be shut down again, and everybody has to go home again, except now there's much more people who are actually infected, and we have to start all over again trying to contain it. And that's why it's too early. We don't know what's going to happen. And if you don't know what's going to happen, when you're experimenting with people's lives, you don't do it. That's the ethical rule of thumb. That's the Hippocratic oath, above all, do no harm. And that's not what's being done here at all. They're just gambling with people's lives. Where are we? Oh yeah. So next portfolio. So that's our worst portfolio. Earnings portfolio is a self-hedging portfolio, unlike the others that use the STP. The earnings portfolio has its own shorts. It's at 85%. I don't think it moves. I think maybe too much self-hedging. Let's see. Control F. Earnings. No. What do I do? Earn. Spelling. Ing. That's not it. Oh, all the times they talk about somebody's earnings. Seriously? Oh, there it was. Earnings portfolio, 79.8, and because it's self-hedged, 85.7, not moving very much, but that's fine because we had a big gain in that portfolio. We didn't want to lock it down. Like the LTP STP though, it's up 100%. Right? The long-term, short-term portfolios are also up about 100%. This one wasn't quite as easy because we only had $100,000. We didn't have as much room to maneuver as we did with the long-term and short-term portfolios. And also we had a rough start on a couple of these things. Futures now portfolio, 26%. That's very good. I can't imagine that was anything like that last week. Control F, future. They were at 7.2%. And what we say they are? 27%. So up 20% in a week, in 2 weeks. Hemboka, 34%. That's crazy. I mean, we didn't touch this thing. Seriously? I forgot the Hemboka portfolio. Well, whatever it was, we'll never know. Apparently, I forgot the Hemboka portfolio. And that leaves Money Talk, which we just reviewed this morning. It was 9.8. It is 9.8% now. I think that's down from this morning. Anyway, and it was like negative something last time. So there you go. That's all. And also gained about 20%. So that's where we are. It's a runaway market. And again, I'm not saying I wouldn't shut down Money Talk. I wouldn't shut down the flatter portfolios, the dividend portfolio. But the long-term, short-term combination up 100%, and the earnings portfolio up 100%. Am I going to be up 400% at the end of the year? No. That's highly, highly doubtful. Not going to be up 100% a quarter. It's not really a quarter. We start in October, so let's say whatever, and a half. So even by the end of the year, it'd be up 200%. It's highly doubtful. It's unusual. And I might consider it if there were no risks at all, but there are huge risks. Massive, massive risks. So I don't know. And the Fed's about to make their decision. Let's take a look at the EIA for a minute, just before the Fed starts. We had a surprising draw in gasoline. We'd like to know why. They made less gasoline. Now let's make sure we're looking at the right one. April 24th, yep. So oil increased by 9 million barrels, blah, blah, blah. Gasoline decreased by 3.7 million barrels. That's weird. Distillate fuels increased by 5.1. So net, you got 14 minus 4 is about 10 million barrel bill. That's half as much as last week. We exported about the same. A little bit, we exported a little bit more, and we made a little bit less, but not enough to make any huge difference. It's weird. What happened? I don't see it. I don't see any particularly. Now, oh, here, that's interesting. Look at refinery capacity dropped a lot. That might have something to do with it. That's a big difference. Look, last year, 88%. They're running at 70% capacity right now. That's interesting. But gasoline production wasn't down that much. Gasoline production was down 1.4 million barrels, but that's not a huge, huge amount. Look at it last year, it was 9 million barrels. It was almost 10 million barrels last year. Now it's down to 6. That's 30, 40, it's 40, almost 40% off, 35+% off. How crazy is that? But no, there's no particular huge market here. All other oil, nope, all other oil is flat too. There's no real good clues in here as to what the hell happened. And we added 1 million barrels to the SPR. I can't see anything here. Fed, what's the Fed doing? 2 minutes. So meanwhile, the price of gasoline was $2.88 last year. Now it's $1.77. Well, it's not bad. It's about 30% off. Oil, though, is 1/4 of what it was, 75% off. So you're getting 30% off gasoline because oil is 75% off. So that's an interesting thing, too. That's another way we're getting ripped off in the crisis. All right, hang on. Let me put the TV on so we can hear about the Fed.
I do expect that Jay Powell will also express some optimism that we will get through this and that the economy will bounce back strongly in 2021 once we have dealt with this medical issue.
This is JP Morgan. He's saying that he's expecting optimism from the Fed. We'll see. I don't see why not, though. I mean, that's the point. The Fed said they're going to do whatever it takes to get us through this. And I think that Powell's going to say now they're assessing the situation and they're ready to act. That's all he can really say. Let's get to that. So, FOMC meeting. And they're not going to say much. It's only the statement. It's more important what Powell says in a half hour at the news conference. Who's got a question? Viacom, can you talk about the debt level and how they service this burn? I mean, I don't want to get heavily into it. It's a big topic, but it's the normal debt. You know, I mean, it's just that in the scope of their operations, they have cash flow to cover the debt. They're not a foolish company. They acquired CBS, although really they reacquired it. They used to be the same company anyway, but they acquired CBS, and they're going to service it out of the cash flow from the two companies. It's not very complicated, and I don't believe that they can't do that. Unchanged, no shock. 0. to 0.25. Oh, they're confident the country has weathered the virus. They are willing to use the full range. In the amount needed. Ay, ay. March. Wait, here it is. Oh, for God's sake. I can read, just reading the thing. Here we go. The Federal Reserve is committed to using its full range of tools to support the U.S. economy in this challenging time, thereby promoting its maximum employment and price stability goals. Coronavirus is causing tremendous human and economic hardships across the United States and the world. The virus and the measures taken to protect the public health are inducing sharp declines. It's tremendous human and economic hardship, sharp declines in economic activity, yet this is yet not smooth. I need people. I need chart people who put things up for me. Yet this is what the S&P looks like. All right, let's just contemplate this. Okay, we have, oh yeah, here we go. Tremendous human and economic hardship across the US and the world. Tremendous human and economic hardship across the US and the world. Okay. What was that article yesterday about cognitive dissonance, right? Sharp declines in economic activity, a surge in job losses, weaker demand, significantly lower oil prices. Disruptions to economic activity here and abroad have significantly affected financial conditions, have impaired the flow of credit to houses and businesses. Has it? Because it sure isn't measured by this instrument. This instrument gives us basically no indication that any of that stuff happened. That's worrisome. This is what we mean by cognitive dissonance, right? How does this reflect that? It does not. This reflects that. This is going too far, but this reflects that. This reflects that. This does not. This reflects that all this is bullshit and that there's no problem. And somewhere between the two is the truth. And don't forget, this is the Fed glossing things over. The ongoing public health crisis. How many horrible things do they have to say in the same statement? I wonder if they're doing that on purpose. Will weigh heavily on economic activity, employment. Is there any reason to be reading this thing if it means nothing to the market at all? Is there really any point to reading a Fed statement if you don't care about the words in the Fed statement? The ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term, and poses considerable risk to the economic outlook over the medium term. So we're maintaining our zero rate, which obviously nobody thought they wouldn't. The committee expects to maintain this target range until it's confident the economy has weathered the events. So we're going to keep it at zero as long as necessary. And they said that about the other crisis. When they were 3%, they said that 12 years ago. So don't hold your breath if you're waiting for it to go up. The committee, not that you can hold your breath if you have coronavirus. Too soon. Okay. The committee will continue to monitor the implications of incoming information for economic outlook, including information related to public health, as well. Isn't that nice? They're going to actually pay attention to the papers, as well as global developments and muted inflation, and they will use tools and act as appropriate to support the economy. In determining the timing and size of future adjustments, the committee is the same bullshit they always write. Next one, 2%, blah, blah, blah. The assessment will take into account a wide range of blah, 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 blah. All right. Support flow credit to households. The Federal Reserve will continue to purchase, this is important, continue to purchase Treasury securities. In other words, the government can print as much money as they want and the Fed will buy it. And agency, residential and commercial backed securities. Okay, which is good for Freddie and Fannie, in the amounts needed to support smooth market functioning, thereby fostering effective transmission of monetary policy to broader financial conditions. In addition, the committee will continue to offer large scale over, and they'll keep doing the POMOs and the committee and the repos. The committee will closely monitor market conditions and is prepared to adjust its plans as necessary with no dissent. No dissent. As much free money as you could possibly want, have, or print for as long as you would like it, is what they are saying. So no shit, our portfolios are up 20 to 30% in 2 weeks. Because we do have the, all right, go back to that. We do have the virus under control, and that's a tough thing to say, but it's relatively under control. Now, even if they screw everything up by letting people out too soon, at least we know how to get the virus under control. And who was it? Was it Snow the other day was talking about, was it monks or masons or something? Snow, where are you when I need you? I'm pretty sure it was yesterday. He said something about now I'm thinking Monday. I hope it wasn't last week, because then I'll seem silly. But anyway, the point is that back in 1812, maybe it was the Mormons, I don't know. all these sects seem the same to me. SNO, no disrespect, but you know, good friends. Nothing. There you go. Quakers. I knew it was something. that would not have come to the top of my head. So, I didn't do that. I did not touch that thing. That's weird. Okay. So I thought this was very interesting because he says, and that's what I was reading over the weekend too, a lot of stuff like this. A Quaker meeting. We were slow to reopen in 1918. Our archivists found this after I got curious, 10th to 12th month. Due to the great 1918 influenza pandemic, no meetings are held for 3 months by order of the health authority. So they know what to do. The 1918 pandemic was insane. I think 25 million people or something died in that one. Everybody was infected. People were dying right and left. And how did they stop it? 3-month quarantine. 3-month quarantine, not with exceptions. And don't forget, these people were farmers anyway. You know, I mean, not many people were working. Like in 1918, there weren't a lot of factory workers by comparison to today. Probably, if I had to think about it, I'd say probably 80% of the people in the United States were still farmers back then. 70% at least were still farmers. 1918, I mean, think about that. It's like, you know, the radio was just being invented. So we're talking quite a while ago. Motor cars were just becoming mass produced. So people were not living the urban lifestyle at the time. And so social distancing was a lot easier to enforce. And they still had a lockdown of the whole country because the thing spread to pretty much everybody anyway. And what do they finally do? After not doing it, they had an outbreak and it spread. They thought they had it contained, and then it respread and was way worse the second time. Exactly what they're worried about here. And that's the problem, that the mistake, the potential of doing it wrong only leads to a much longer, much more severe lockdown when already so many people are infected that you have a huge problem. And then you cannot afford, obviously, to do it again, because if you screw up again by doing it too early, now you can doom the entire planet Earth. You know, it's all fun to mess around when you only have 1 million infections, but how do you think the rest of the world feels? How does the rest of the world feel when we have 1/3 of the world's infections now? China still has 83,000. They still haven't hit it. They were still under 83,000 like ages ago. They were under 84,000. They've been between 83,000 and 84,000 for like a month. Still have some infections, but can't get over that 84,000 number. We have 1/3 of the world's infections. We're a total disaster. And I understand a lot of you guys are deluded because I don't know. I don't understand the logic. I don't even understand how. I can't even argue with people about it. It's like, how do you not think that this is a disaster? How do you think? Oh, because the U.S. this or the U.S. that. We're so different. Because what? Europe doesn't have electricity. Europe doesn't have computers. Europe doesn't have trains. Europe doesn't have office buildings. They don't go to work. Hong Kong's not a city. Singapore is not a city. They don't have hotels. They don't have travel. People don't go there. There's no casinos in Macau. You can't compare it. I mean, it's the whole world is essentially the same. Anybody who actually travels knows this. It's not that different. I mean, you know, the difference is, but it's not that different one place to another place. We're all people. We have buildings and jobs and blah, blah, blah. Even Bangkok. I was in Bangkok, and honestly, it's no real, you know, not as big as New York, but it's no different than New York. It's no different than Philadelphia. But some areas have big buildings, some areas have small buildings, but they plenty of buildings, plenty of people, subways, trains, malls. It's just, what do you expect? No matter where you go, that's what things are like. The conditions aren't that different. We're out of control. And we're undisciplined, we're out of control, we're unprepared, we're unresponsive, and the solution is to open it back up and pretend it's not a problem. So I'm concerned. But on the other hand, as I said Monday, when I was basically laying out the bullish premise, it doesn't matter. The kids are going to go out and they're going to they'll all get infected. You got the under 25s are all going to go get infected, or the over 15, under 25, all going to get infected. They'll spread it to their parents, of course. So a lot of those people will get infected too. People from 25 to 45, for the most part, are going to go out. Even though two of our members actually yesterday were talking about their own infection. Both of them were about 40. So 2 members about 40 years old, both got infected, and we're telling their story yesterday, which really got to read that if you haven't read it. It's very, you know, I mean, it's great that they shared. It's great to hear somebody's personal account of what happened to them. You know, both in good shape, both got infected, both got over it, but very, very tough fight to get over it and lingering after effects. You know, but people are dying, and it's really risky. I had dinner with my mom yesterday, and we sat you know, she's decided after being locked up for a month, you know, for a month and a half, my mom has decided that it's not so bad if we sit on the porch on her outside table, and because it's fresh air, and sit on the opposite ends of the table. So at least we can talk to each other, which is nice. But still, I mean, it pisses me off because, you know, like I said, what's going to happen is that the kids are going to go out, they're all going to get infected, and hopefully not too many severely, but either way, they're going to pass it to the next set, which is their parents, who are generally, if you're 25 to 15, your parents are, you know, 35 to 45, basically 35, 40, yeah, roughly. I mean, my kids are 20 and I'm 57, so maybe older. So let's say 55, say 35, 55 range. So some of that group is going to get infected anyway, because you can't help it. If somebody in your household has the virus, I don't think it'll be very hard not to get it. Then of course you have a large percentage of people 45 to 65 who can't not work anymore. They can't afford to stay home. They can't afford not to go to work if they can. Because if your company reopens and you just say, I don't want to go to work because I have a wife and 3 kids and I could die, they're going to say, well, that's okay, but we're going to have to get somebody to do your job. And there's millions of people out of work who would love to do your job. So either you take your risk, either you risk your life and go to the office, or you find another job with 20 million people unemployed, 30 million people unemployed. Be one of them. So how many people are going to bow to that pressure? So given that happening over the next, and again, this is assuming that we don't have a big backslide where this number goes from 3.5 million. Oh, well, that's the world. But in the US, the number doesn't go from 1 million to 5 million. But literally, it can go from 1 million to 5 million before you can stop it. And then we shut back down. If that happens, then it's a reset of the cycle. But if it goes well, this is what's going to happen. So the kids will get infected because they group up, young people. The kids will get infected. Their parents will become infected in large parts. They will infect their friends and their workers and so on and so forth. So a lot of people are going to get the virus, obviously. Not much you can do to stop that anyway. But it's the question of when. But a lot of people get the virus. We still have no vaccine. We still have no cure. But then what's going to happen at that point, though, is except for the people who are able to not go to work and are worried enough not to go to work or not to go out, they will become shut-ins. And so I'm talking about the maybe 25% of the people from the ages of 45 to 65 who are at high risk and are able to make the choice not to rejoin society. That group will be out. And of course, then people above 65 who are at super high risk, the majority of those people will probably still opt out of society. But the problem there is, who's going to take care of them? Now you've only got 50 million people above 65, and you've got maybe another 20 million or so people. So you have 70 million people out of 300, 80 million people out of 300, about 25%, 20 to 25% of the population will still be under voluntary self-lockdown. But who is going to help them be locked in? Where's the clean food going to come from that wasn't touched by anybody who could have been infected? Where are the clean meals going to come from? Who's going to, what aid are they going to get? Who's going to come to their house and service them who doesn't service any potentially virally infected people? This is how it all falls apart. And that group, which includes my mother and includes me, that group is basically just Donald Trump is basically saying, screw you. if you're old, if you're sick, if you are worried about getting the virus, tough. We've decided to open the country back up, and we have no plan at all to protect you. And if you're in this group, you're going to realize it's going to be like the walls are closing in on you, because you can avoid getting the virus. And it's miserable. I'll tell you now, it's miserable. I mean, it's obvious we're all dealing with it now. It's much more miserable when everybody else is going out and having a good time, and you still haven't gotten the virus, and you're still worried about it 3 months later. 3 months from now, you'll be sitting there in the middle of August, and it's 110 degrees outside or whatever, and you're sitting inside, and you're not going out, and you're not going for a swim, and you're not doing this, and you're not doing that, because nobody else gives a shit, because everybody else is out having a perfectly normal life, and nobody's wearing a mask, and nobody's protecting anything, and because they all went through it already. Some people died, 1 million people died, 2 million people died, whatever, but everybody else is fine. They're done. You know, there'll be a certain point at which enough people are immune, and enough people have not, you know, enough people will be immune that it goes back to there's very few infected people. You're back to the 1 in 500, 1 in 1,000 people that are actually transmittable. That's when it's safe to go back outside for us. But that's not going to come until late summer, early fall. It'll come eventually, and that it doesn't mean I can't get the virus. It just means that my chances of coming in contact with someone who has the virus is very small. Just like Ebola, it's bad. You can get it, just don't go there. When they have Ebola, they close the region where the Ebola is. It's incredibly bad, and you really don't want it to spread. You certainly don't want someone with Ebola getting on a plane. But fortunately, the people who get Ebola typically are not the kind of people who travel on planes, so they don't usually have a meeting in New York the next day. Also, Ebola hits you very fast. That's the bad thing about this virus. It doesn't hit you fast, so you're still mobile. See, there's a lot of deadly viruses, but they hit you so fast that you basically end up going straight to the hospital right after you get infected before you can really transmit it. This virus, you can be walking around for 2 weeks infecting people with no symptoms. That's what makes it so dangerous. So anyway, all right, waiting for Pal. So I wonder who's going to do a Q&A. This reporter's doing her thing in the garden on Bloomberg. She's like sitting in the garden outside. Oh, but it's for sale. I wonder what she's doing. Oh, she's talking about home sales. She's doing her remote. Oh, wow. See, even the reporters are getting out now. So anyway, so I'm concerned. I don't think things are going to get totally back to normal. I'm a little bit worried about what's going to happen, and I think that the market is really not pricing any of this stuff in, none of the bad side. Now, it is going to take us, though, you're going to have, everything's going to seem fine, and Trump's going to talk about how great everything is, and all the companies are going to talk about how great and how relieved they are to be opening up and blah, blah, blah. So there'll be this great momentum moving towards opening up over the next 2 or 3 weeks, and it will only be by May, it'll take until May 15th at least before you even start seeing signs that it was a mistake. And maybe it won't be a mistake. Maybe. That'd be great. But if it is a mistake, you still won't know it for 2 weeks. So meanwhile, we could have a nice 2-week rally. We can get way back closer to where we are. But at that point, I don't know if there's enough hedges for me to want to keep going at that point. If we start to see any backsliding, that's why these numbers are now going to become critically important for us again. We got to watch these numbers like a hawk. We got to make sure we see what's happening. If we start seeing any backsliding, we're not going to be the suckers who wait to get out. So make sure you know how you're going to unwind your portfolio. Make sure you know what hedges you need to slap on your portfolio, and to make sure you're covered, because God forbid this thing starts backsliding, it'll be worse than where we are now. If they say, oops, we shouldn't have done that, which is pretty much what Fauci and everyone else is saying, except Trump's ignoring it, and they're under orders to be very quiet in their objections, although they're still objecting. If you listen to what they're actually saying, they still object to this idea. Because you're gambling with people's lives. So we shall see. So what's Robin saying? I like the idea. Robin says, I like the idea of fuel cell and plug, but I don't know how to evaluate them. Okay, well, ask me that in chat because that's like a whole long thing that we certainly don't have time for right now. But fuel cell and plug. I mean, you evaluate them just like anything else. I don't know if that's a general question of evaluation, but anyway, ask me in chat and we can go over some examples of how we look at something like that. But again, I like them because they're future stocks, not because I think they're in fantastic shape now, but I do think they're both companies that have viable technology that people are actually using. This is important to me too. Like fuel cell is only a $500 million company, $450 million. They don't make any money at all, but they're not losing too much either. Well, they are. I mean, they are losing a lot, but their technology very, very promising. So you're only valuing them as a speculative investment, and it should be a very small part of a portfolio. You know, things like this you don't put a lot of money into. And plug is the same thing. So I mean, I guess your question is how do you value companies that don't make any money? And here's Plug Power, $1.4 billion, also no profits. But and I don't know what's better, okay? Because you got fuel cell, 70 million in revenue, loses $70 million. These guys have 300 million in revenue, losing $100 million. What's better? I don't know. I guess theoretically, and obviously these guys have triple the value of fuel cell. The value, triple the price of fuel cell. The thing is that their sales are growing, their losses are declining. That's by theoretically declining. I'm sure every year they projected that they would lose less money the next year, and it never happens. You know, I'm sure they constantly are projecting that next year. I bet this said 78, this probably said 60, and this said 40. So then now this says 85, and then this says 94. Well, this year says 94, and this year says 66, so down a third. Am I going to believe that though? I get next year. So this year they'll lose 94, and next year they'll say we're only going to lose 85. They'll be back to here, and then they'll lose, and then they'll project that they're going to get down to 60 again. That doesn't mean anything when you make these projections. They got to show some capability of getting their costs under control and making a profit. But you know, the point is, you see this growth and you say, well, okay, so let's extrapolate that at least 100, 175, 230. So plus 75, plus 60, plus 60, plus 100. So if you say plus 100, plus 100, and you say, well, at some point that's going to get down to like 30, 20, you know, as long as they don't ramp up expenses too much, this could happen. And eventually they'll be doing $1 billion in sales. And if they're doing $1 billion in sales, they should make a couple $100 million. And if they're making a couple $100 million, then they have a reasonable valuation. But that's 5 years from now. That's why the portfolio is called stocks of the future. It's not called stocks. Actually, I'm sorry, it's not. It's the future is now portfolio. Think of it. Wait a minute. Where's my future is now? That's true. It's not called stocks of the future. It's called future is now. But that was based on just something we were joking about at some point. But anyway, so here we have plug. We didn't do the other one, which was plug. What was the other one? It was plug and fuel cell, right? We have fuel cells somewhere. I'm confused. I swear we have fuel cell somewhere. Maybe I meant to, no, I meant to and it got away from us. I'm pretty sure that's what happened with fuel cell. But what did we do with plug? We sold the 250 plugs at $4. We sold the 250 puts for $1.10. That's net $1.40. So when it's at $4, we agree to buy it for $1.40 for 66% off. That's not a big stretch. And how much would that cost us? It would cost us 5,000 times $1.40 is $7,000. So we're taking in a $100,000 portfolio, we're saying that we will buy $7,000 worth of fuel cell of plug in 2 years for 1/3 of the price it is now. Okay, we're not making a big bet here. And mostly we're expecting to just keep the $5,000 we sold the puts for. So we're not even really going to own the company. We just think that that's an interesting technology. We like it for this portfolio because it's a future-focused portfolio. But you know what I really like? Apparently, I really like Total because we took a bull call spread in August and we said it's going to be over 27.50. It's at 36, so we definitely like that one. That one's almost fully paid off. That's $7,000 net out of 7,500 potential. We should shut this one down, frankly. Beyond Meat, we took a position in because we think that's really something that's going to go somewhere. It's back to $100. So we're miles in the money on that one, but we weren't when we did it. What was Beyond on 320? Oh, his pal. Oh, look, he's got like a blue curtain behind him, and he's wearing a suit and tie. Well, jacket and tie. We don't know if he's wearing pants. Let's see. Who are we talking about here? Plug? No. Damn it. Come on, brain. Beyond. Wow. Really starting to fall apart. BYND. So yeah, they were down around 50 when we did this. So we sold the $50 put right at the money at the time. And we bought the bull call spread that was in the money a little bit. We bought the 40 calls, sold the 65 calls. Not very ambitious. The chart looked like this. Looked like a disaster. We took a stand, and it held up since then and got back. And the other one we liked so much we did it twice, the SunPower, which I think is a ridiculously undervalued stock. But that's solar cells, but they have actual, SunPower has actual profits. Beyond doesn't, but SunPower does. Well, let's see. Maybe they do. SPWR. SunPower might have profits. Also, small company, 1.2 billion in sale, 1.2 billion valuation. See, profit. I knew it. $22 million. But that's the thing. Look what happened. And you know why? They stopped doing R&D. They do so much R&D, and this is the thing people don't understand about these companies. You have to look at why are they losing money. So now we're having a big discussion on valuation. So the thing isn't so much are they losing money. Losing money isn't the be all and end all. Just the other day in chat, I mentioned there's a Thomas Edison quote, and he says, we haven't failed to make an electric light bulb. What we have done is found 10,000 ways not to make an electric light bulb. So in other words, he didn't invent the electric light bulb like he got hit by an apple and said eureka and came up with a light bulb. He said, now he didn't invent the concept of an electric light bulb. People had electric light bulbs, but they burned out. His invention wasn't, there were electric lights, but the filaments would burn out. And so they were not really useful. They would have them for stage shows and things like that, but it wasn't useful for someone's home because it was too expensive and it would burn out and you'd have to replace them and they were dangerous and they would get hot and cause fires and blah, blah, blah. So it wasn't like there wasn't an electric light, but he wanted to invent a disposable electric light bulb that the average person could have in their home that would last a reasonable amount of time. That was the most important thing. Had to be inexpensive and last a reasonable amount of time. That was the key. So they tried every metal known to man. So this is like curing a virus, right? He says, we know what we need to do. We need to cure a virus. He's saying we need to light people's homes in a manner that's going to be realistic for the homeowner. So he sets out to do that. He says, well, what do we know? We know that a filament between two electrical posts is going to draw a charge and heat up and create light. So then there are how many elements and combinations of elements, and how thick should they be, and how strong should they be, and how much current is going to go through them, and so on and so forth. And the big breakthrough, of course, is when he realized that if he took a much thinner filament in a vacuum tube, that it would heat up and create light without burning, because there's no oxygen to burn it. So it would just heat up, and you'd get the light from the heat of the metal as it fused, but because there was no oxygen, it wouldn't oxidize and then burn itself out quickly. That was what he discovered. But it took him 10,000 attempts to come up with that finally. And his lab worked on it for a year, 2 years, whatever, doing it, and they failed, and Edison was a famous, book note taker, and he would write down every single one. Fail, 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 until he gets it right. So what is that? R&D, of course. So was Edison wrong to spend 2 years of R&D money burning a budget and spending all this money to get it right and to get his product right? No. He became like one of the richest people on earth. He left a lasting legacy. GE is his company. GE, General Electric, is from Edison. It was Edison Electric at some point, and then became General Electric. So that became a giant conglomerate, and obviously it wasn't the only thing he did. He had a phonograph. He invented the movie projectors, all kinds of stuff. But he was not he wasn't a eureka kind of inventor. He was a guy who said, how do we make this thing happen? He was an idea guy, and then he would say, let's do it. Like Jobs. He was more like Jobs. He was like, I want a little tiny phone that's like a computer. That was Edison's job. I want a little tiny phone that's like a computer. Then he would bring in the finest minds to work with, and they would work on it until he got it right. And he was a perfectionist and a slave driver, just like Steve Jobs. So I guess that's basically it's a really good comparison. That's what Edison was like Steve Jobs. Wasn't actually the guy who came up with the invention. He was the guy, though, who made sure that the other guys came up with the invention. So, but it's all about R&D. So when you look at a company that's new and growing and spending money and doing stuff, you say, well, okay, what are they focused on? Then also the sales are kind of erratic. You say, well, the sales are erratic. They're still putting together their panels that they want to put out. But now they've done it. They've got the panels that they want to be selling, and they're getting the sales for the panels that they want to be selling. And this company's got a really bright future. And this isn't some far-reaching, way out thing. These guys are going to make money this year. Well, maybe not, but if they don't, it's excusable. But it's supposed to make a little bit of money next year. By next year, they should be on track. And the year after that, these guys should be totally justifying their valuation. I mean, their valuation is only 1.2 billion, so they're going to justify it next year. But you have to be able to look at a company like this here and say, what are they doing? Why are they losing money? What are they spending the money on? Is it worth it? Hovnavian's a good example. In the last crash, Hovnavian had terrible, terrible numbers. But you say, why are they losing money? Well, they lost money because they had to write down a ton of real estate. Are they selling the real estate at that price? No, of course not, but they wrote it down. Why did they write it down? Because they got huge tax breaks for writing it down. So they wrote it off and took a loss. So what? But somebody would look at their books and say, oh my God, they lost $2 billion last year. It's like, no, they didn't. They don't have $2 billion. They haven't done that lately. Terrible. Is this 780? Like the other company? Wow, that's awful. We used to love these guys. When they were super cheap, we loved them. They're gonna do their same sales. They're local. They're not local really. They're an East Coast builder. Let's call them an East Coast builder. They're mostly like Northeast and Florida kind of builder. They don't really mess around in between. And most of these losses, when you look at the losses on their books, are basically write-downs and things like that. And their cash flow is good, and everything else is good. It's a family business. A great solid builder, but never going to throw off a lot of profit. That's not what they do. And they're only worth $73 million in market cap, which is crazy low. And sometimes by accident, they'll have a really good year. And sometimes they'll have a terrible year. Like I said, they lost $3 billion back in 2008. But here, look what they did is they made a ton of money after that. And now they're back to their normal like dribble, year by year dribble. And they'll eventually, that's what you do with a home builder stock, though. If you want to ride them, you ride them until they have a couple of good years, and the stock skyrockets, and then you get the hell out. But again, it's not about whether they made money or lost money. You have to understand why they're making money and losing money and what they're spending it on, and is what they're spending it on worth it? When you start a restaurant or when you open a business, you're spending money. You're buying chairs, you're buying tables, you buy ovens, you do this, you do that, you advertise, and it's all for nothing. So 5 customers can walk in the door. Does that mean your business is worthless? Does someone come in the first week and say, oh, forget it, close this restaurant, it's a waste of money, you wasted all your money? No, it takes time to build a business. And it doesn't take weeks. A restaurant could take weeks, but it takes years to build a proper business, especially manufacturing businesses and things like that. Look at Tesla, look at Amazon. Amazon lost billions and billions of dollars year after year after year. Are they doing something worth doing? You can't just look at profit and loss. You have to actually analyze the company. And if you are unwilling or unable to do that, you should not bother with the stock. And asking me or asking anybody to tell you what the valuation of something is or whatever, that's not good enough. If you can't do it yourself, if you don't understand the stock well enough to go through it and figure out how they're making money and what they're doing and what they're spending it on, it's probably not a stock you should be with, because you're not going to know why it went down when it goes down, or why it went up when it went up, and you won't know when to buy and when to sell. So if we go back on Hovnavian, if we can do that. Really? Oh, no. Oh, whoa. Jesus. Not Hovnavian. Who the hell is this? Oh, it is Hovnavian. Wow. Watch this. So like I said, wow. That's so funny. Holy crap. So this is why you own a home builder, though, okay? Every once in a while, you hit an upcycle. And in that upcycle, they can get insanely valued. But then they're going to crash. But you know what? I don't care. This obviously doesn't usually happen. Things were wacky then. But this is what usually happens. Down, up, down, up. And these ups are significant. This is because of the splits. This is $200 basically at the top, and this is $30 at the bottom. So you're talking about 5 times, 10 times up and down. And that's normal. That's what a cycle is for home builders. This is the 85, 87, then we have the savings and loan crisis, and it went down and down, bad years for a long time. Then it got better into the early 90s, but then it crashed when everybody started putting money into tech and nobody gave a shit about housing. Then like that, then flat. Then the housing market crashed. I'm sorry, then the tech market crashed and everybody started buying homes. And that was a really big thing for a while. Then the housing market crashed and nobody bought homes. Then we had a bailout, blah, 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 something else, whatever happened here. People got back to work. The economy got back to normal. Now it's all back down, and now we're down and down and down. Now we have another crisis. But you know what? I like them down here. I like them more at 6, but still not bad at 13. Anyway, what were we talking? How did we get on that topic? I don't even remember. Really lost there. We're talking about valuations. Yeah, I guess we were. Oh, that's right. We were just talking about valuations in general. So, well, Powell's pretty much done. The Dow's up, still up 600 points. So good. All working out. Wow, this girl on CNBC is doing a terrible job with the camera. I don't know who that is. Not CNBC, Bloomberg. What was I going to say? Oh yeah. The cyclicals are historically they people have so much trouble valuing cyclicals because it's not about. You have to be a real investor though. You have to be a real long-term investor. That's part of the problem. What the hell's that? 2-year. Oh, that's a Dow. How do we get on that? You have to be a real long-term investor. You have to actually think in terms of years. And so I don't know when Hovnavian is going to go to 100. I just want to be there when it does. So I'll just keep moving. I'll keep rolling my puts and calls and keeping my position and so on and so forth. And one day, if I'm lucky, I'm going to catch the wave when the big one comes and I'm going to ride it up to the top. And hopefully I'll be smart enough to take my money and run when it gets to the top. But that's the trick to value investing. I mean, especially when you start doing, especially into companies that are future-looking companies. You know, like Beyond. Beyond's another one. They've got a possible future. But with Beyond, and I again, it's like if we do this in chat, I could find stuff more easily instead of, I'm not going to do it now. But I did. But when we invested in Beyond, I did all the math. And I said, well, let's say this much percentage of the total meat consumption goes to Beyond, not to Beyond, but to fake meat, and that it becomes more acceptable. And don't forget, this is only version 1.0 of meat substitute. Okay, this is tech, and this is, people don't understand this about Beyond. It's not food, it's tech. They are manufacturing fake food, just like a movie or a TV show is a manufactured play. They take the little actors and they make them even smaller and they put them on a piece of film and they can show it anytime they want. Instead of Clark Gable, at the time obviously, instead of Clark Gable having to go on stage and perform, now you've got Clark Gable on film anytime you want to watch him. And you can capture that one performance with no mistakes and musical background, and because you can do that, instead of just being a play, now they can do lavish sets and they can do huge productions and they can change this and that. But all in all, it's just a play. But from the time of Shakespeare, from the time of the Greeks until, Shakespeare, for the Greeks to Shakespeare, the play was actors on a stage. And Shakespeare's like what, 1650 or something like that. So Shakespeare, and then from Shakespeare, another 300 years from there, 200 years from there, 1850. So another 200 years of Shakespeare, and Lincoln's still going to the theater. Unfortunately, if he was home watching TV, wouldn't happen. Like Trump, if he was home watching TV on the couch in the Oval Office, wouldn't have been shot. So Lincoln goes to a play, 1860. 1960? No, relatively no people aren't going to plays. Why? Because between 1850 and 1950, somebody invented film. Edison, back to Edison. So now we have film. Well, he didn't invent film, obviously, he had cameras, but he invented moving pictures. And when you have a moving picture, you can now take this very valuable thing, the play, with the actors that you cannot possibly show to everybody in America. And now you can show the little play to everybody in America. Right? It's not, but that's not theater, it's tech. And that's what meat is like. Okay? It's not meat, it's tech. Artificial plants are not plants. Any gardener is going to tell you the artificial plant's not a plant. A print is not a painting. It's technology. It looks like a painting. People can't even tell the difference between a painting and a print. And therefore, it's effectively the same thing, except that it's much cheaper and just as good. Now, 30, 40 years ago, was a print just as good as a picture? No, not at all. Now, yeah, pretty much hard, really, really hard to tell the difference unless you closely examine it. But basically, it looks pretty much the same. So meat right now, version 1.0 beyond, not the same as meat at all. No, I mean, obviously, you know, people say that, but it's not. But 20 years from now, are you going to be able to tell the difference? Probably not. They talk about that in Star Trek actually all the time, because they talk about have you ever had real food? Somebody said on Star Trek once, have you ever had real food? And you know, some people do and some people don't. But the humans, apparently, they go their whole lives, they have no idea what real food is. All their food is synthesized. And they don't even, not even real beer, real alcohol. Everything is synthesized and manufactured. But it's, you know, they think it tastes just as good and whatever. Other people who eat real food, the aliens who eat real food, tend to go, "Ooh, what is this crap? It's like this is not real." So you know, this develops over time. And if you think about this, it's like saying they're competing against hamburgers. What chance do they have? No, they got a great chance, because look at what's happening now. Trump just had to put an executive order out to keep the meat manufacturing running in America. It was about to shut down. And then where are you going to go? Suddenly those Beyond chicken nuggets are going to look kind of good to you. So yeah, down the road, this is going to be a huge thing. So I ran the numbers and I made not really major assumptions, but said, look, eventually they're going to get 5%, 10% of the market, the artificial meat, and Beyond will get this percent. But that market is gigantic. So look at just McDonald's, billions and billions served. All they have to do is get a percentage of McDonald's, and they're going to have $1 billion in sales. Just all you have to do is get 1 out of 10 people in McDonald's to buy a Beyond Burger. Burger King, wherever else they're doing it, you know. But it's not just burgers, though. They're already doing chicken. They do burgers, they do chicken, they do meat, and there's companies working on steak really hard, like not Beyond, but other meat companies like them are really trying to like get steak down. And eventually one day they'll figure it out. And you can turn up your nose at it and so on and so forth, but it's a market. Look at artificial sweetener. Think about what a big market that is. Nothing like sugar. Doesn't seem to matter to people, does it? They still have it instead of sugar. Anyway, so that's valuation. You know, when you look at companies, especially when it's future companies, you got to really think about the business long term, where it goes, how it goes, and also, are these particular guys likely to survive it? That's true too. I like these guys for various reasons. When 3D printing was around, though, everybody used to ask me about 3D printing. 3D printing is still around, but yeah, I don't even know if they're still in business. The DDD was the big one, right? 3D printing, 3D systems. There you go. So at one point, they were getting towards $100. And everybody was asking me about this all the time, all the way from here to here. Everybody would be, oh, da, 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 da. And I said, no. I said, no, because there's nothing special there. They don't have any, there's no major patent. They're just using existing technology, putting it together, creating effectively a dot matrix print of the prints in the third dimension. And anybody can do this. And I said, frankly, if anybody's ever going to win this game, if it becomes a thing, it would have been Hewlett Packard, because Hewlett Packard would have said, screw this, we own printing. Little did we know at the time, Hewlett Packard would no longer own printing. Hewlett Packard is barely even a company anymore. But Hewlett Packard owned printing. They owned laser jets and they owned the inkjet market. It was all theirs. There was hardly anything else to buy. They had wiped out everybody back in those days. So I said, if it was worth anything, Hewlett Packard would be doing it. It's not. It's not a business. And it is. It never became much of a business. It's certainly a valid technology. It's being used in lots of places, but it's not a common, big, major operation. You know, so it's different. But the meat makes sense. I said this years and years ago. We were talking about a problem. As a problem, it's one of the global problems. Oh, I know. It's McDonald's. When McDonald's started going to China, I said, you can't do that. You can't go to China. And it wasn't so much that they were going to China, that they were engaging in the kind of advertising that was trying to get the Chinese people to start eating more hamburgers, start eating more beef. And they would extol the virtues of beef and the taste of beef and blah, blah, blah. And I said, this is a terrible mistake. I said, you know, Chinese people eat pork mostly, and they eat some beef, but they're not big beef eaters. They eat other things. A lot of chicken, a lot of pork. I said, you can't suddenly switch China to beef. The world doesn't have enough cows, and we can't have enough cows. Cows take a lot of land and use a lot of resources. It's inappropriate for China. It's a terrible thing to teach them. You know, we can't afford $1.5 billion more meat eaters. It was a horrible idea, and that's one of the problems with corporations. They do that kind of thing. Like they're like, "Oh, we want everyone to eat beef." It's like, no, you don't. It's not good. So at that time, that was a known issue. So this is great. So this Beyond thing is great because you're going to actually be able to let people eat beef. But we can't afford that right now. It's not realistic. We can't supply the whole world with beef. It would wipe out the world. So you have to think ahead of a lot of different factors, and that's why that's what the Future Is Now portfolio is about. And you know, once in a while, I feel like getting on a rant and we talk about picking something, but honestly, it's a lot of work. That's in fact, you know, as obviously from what we're talking about now, it is a lot of thinking and a lot of work and a lot of research just to make one freaking pick for that portfolio, because it's a long-term, long-range portfolio. That's why there's only a few stocks in it. And although I had a lot of candidates when we started, we hadn't pulled the trigger on many of them, and I really have to go back over it and do that again. Anyway, meanwhile, fabulous day in the market. Dow's up about 2.5%, as we thought. It stopped at the 2.5% line, though. S&P's a little above the 2.5% line. What's the NASDAQ doing? Where'd oh, my Thinkorswim crash. That's interesting. Okay. Dow, hang on a second. Dow's up 2.4%. The NASDAQ, 3.6%. Holy crap. Powell is still talking. So he's not saying anything that's pissing anybody off. That's the good news. But that's fine. So it's a great day. Oh, the Russell's up 5.5%. Somebody was asking last week why the Russell isn't going up as much. And I said, it'll catch up. Don't worry. Now it's racing ahead. So in general, we're in pretty good shape. The markets are in good shape. There's nothing to worry about other than what if things go wrong. And we shall see what happens. So all we can do now is basically sit back, watch, and wait. We certainly in our portfolios are bullish enough. I forgot what the long-term portfolio just gone over 7, right? Let's see. You know, it's like almost an hour later. Let's see how it's doing. Ooh, no, denied 694. Uh-oh. So what do we have to have? We have to have in the short term, it has to be 506, at least 506, right? Wait, is that right? Yeah, it has to be 506 for us to have a double. Oh, we pulled it off. 516, yes. Still over 1.2 million. So anyway, I mean, when the market was bottoming a month ago, we were around 800,000. So we've come back 50% from 800,000 a month ago. That's just crazy. I wish we had more money to put in at the time. Obviously, it was like a great, you know, you don't get a lot of opportunities to buy when things are that cheap. Unfortunately, though, that's what I'm worried about. I'm worried that we will get another opportunity to buy, and we'll be too heavily invested. So we're just going to have to be very careful And we're going to have to figure out we're going to have to figure out where we stand on these things. So we'll have to see, but we'll see how this goes. We'll see how the openings go. I'm not expecting anything bad to happen in the next week other than more earnings, but nobody seems to care about the earnings. And oh, by the way, the earnings are bullshit. The reason we haven't talked about the earnings much, they're bullshit because they don't account for anything. Everybody's pulling their guidance and only talking about the first quarter earnings. They're not even telling you about second quarter and what it is. And I think the fact that nobody's hearing the bad news makes them think there isn't any. There is bad news. The second quarter is going to be a total disaster, but no one's going to tell you that until July. So we're not going to worry about it. GDP, not worried about it. Just went by today. Nobody cares. Unemployment tomorrow, nobody cares. Another few million people out of work, whatever. The non-farm payroll next week, that's the first dangerous thing that we're going to get. That might smack some people in the face. Non-farm payroll on Friday next week. But other than that, we'll see. So on the whole, good news. Portfolios are up. Things look good. We're opening the cities. Everything's great. Famous last words. All right. Have a good week, everybody. We'll do it again. We'll do it again next weekend, hopefully. If the world is still here, we'll be hanging on. All right. Take care. Oh, wait. What JC says, are you worried about your Tesla short in the face of earnings tonight? Nope, not at all. I should be, but I'm not. I cannot for 1 second believe they can justify where they're at. All right, now ending it. Take care, folks.